Hey, what's up, guys? I'm Michael King, back again with another video. So, in this video, I'm going to be analyzing GBPUSD, telling you what you expect for GBPUSD this week. So, this is monthly time frame, and looking at the monthly time frame, you realize that this is a bearish market. That is, it's a down market. We had this break of structure here. We had this break of structure right here. We also have this break of structure right here. So it means we're having a series of lower low, lower high, lower low, lower high, and then lower low. So this makes GBPUSD on the bigger time frame a bearish market. Now that being said, we are expected to use this monthly time frame to figure out what we are expected to trade on the lower time frame. Because when you do that, it simply makes it way easier for you to know the line of direction you're focusing on for this week. So now if you look at what is happening on the GBPUSD on the monthly time frame, you realize that we have this high right here, and this high right here was when price rise all the way to the value gap. And if the Fibonacci true, realize that this right there is around the 50% to 61.8% Fibonacci level. So it means we are way at the midpoint of this high and this low. We are likely to have a downward pattern, that is a continuation to the downside. But however, now there's something I wanted to point out here is a fair value gap we have right here. And price haven't traded to this fair value gap yet. So there's a likelihood of price to rise all the way to this fair value gap first before it head what? Lower. But for that to happen, also a fair value gap here. So what I'm expecting GBPUSD to do on the bigger time frame is I expect price to trade a little bit down to this fair value gap, then rise all the way to this fair value gap right here, then head lower. So what I'm just going to do is I'm going to quickly explain what I'm talking about for easier understanding. Now this is exactly what I expect it to do right now. It can first trade lower, then once it has traded lower, then we can see it move all the way to this high. That is the fair value gap that we have above. It might want to trade all the way to this fair value gap right here. So it might want to trade up to it. Then once it's done, then we can now have a kind of continuation to the downside. That is, price might not all the way down after trading to this right here. So that's what I expect it to do on a bigger time frame. That's my bias on GBPUSD. And of course, who knows, that might end up not going that way. But I'm going to just point out a little bit of a few reasons why price I want to trace to this fair value gap that we have right here. But before I do that, let's quickly take note of all these levels. Alright, so these levels right now, they are key that we have to take note of. We have this high right here, then we also have this low right here. So we have this high. This is the first level I want you to take note of, this high right here. So let me quickly edit it so that the line will be straight and a little bit bold. So that level is at 1.31422. 1.31422. And I'm going to make the line a little bit bolder so that we can see it clearly. So this is the first level we're looking at. If price can break this high right here, it means we're expecting price to rise to this value gap that we had right here. Now this is the next level I want to take off, that is this low right here. So this low is at 1.20373. That is the low right here. So now I've taken note of the low. Now look at what price is doing now. Price is trading higher to this fair value gap that we had right here. Now this fair value gap that price traded into might want to push price lower, but however, I feel this level that we have right here I likely counter this fair value gap so that price can head higher to this fair value gap that we have here, because price might want to go really high for two major reasons. The first reason because of it wants to clear this fair value gap, and the second reason because of it wants to clear these buy stops right here. So it might want to go up a little bit higher, then head lower. So now let's really take note of this fair value gap that I also have here, because I'm going to be going to the weekly time frame next. so that we can still have a clearer idea. So now I'm going to just use the color green for this fair value gap, so that we can easily figure it out when we have go down to the weekly time frame. And the high of the low of this third candle actually at 1.25001 right here. So I've changed the color and it's green. Now let's also check the high of the first candle. That is how to draw your fair value gap if you want to use these trend lines. Actually, you take note of the low and also the high. That's how you draw your fair value gap. So now 1.23375. Now I think at this point I'm done with the monthly time frame. Remember our bias is we expect price to first trade lower first, then head all the way higher to get to this fair value gap, and also to clear this buy stop. That is our bias on the monthly time frame. After this area is cleared, price might want to start heading lower for a continuation pattern. That's our bias. Now that being said, let's walk to the weekly time frame. Now this is let me zoom the chart a little bit. This is GBPUSD and the weekly time frame. Now what do you see right here? I'm just going to give you guys 3 seconds actually. So 1, 2, 3. Now what we have here is this order block, this down close candle. You can see it right now. Price hasn't gotten to it yet, because when we're trying to look at other blocks, we expect price to trade lower to this down close candle. Now this down close candle will act like a kind of support level to make sure that price does not head lower than it. Then what? Price will head higher. Another confirmation why this other block might hold is because of the fact that we have what? Fair value gap. So now fair value gap and other block are confluence that we can use to believe that this level is likely to what? To push price higher, to clear out this buy stops, and also the fair value gap we pointed from the monthly time frame. So now I'm just going to draw a line once more. Now this line right here is going to just be a line to know the high of the other block. So let's use the color red. Then let's take note of the level. It's at 1.24282. So now done. We are almost done now. We have the high from the weekly time frame, also the monthly time frame. Then we have the low. Then we have this, our area of interest. So we expect price to trade lower, then head higher. That is our bias. Now we'll look for the day time frame just to see if we have anything we can take note of. Now the higher low, this is the higher high. So we have this higher low, then price went up because this is an uptrend. And I believe you will have an idea of why this was an uptrend. It's because of on the monthly time frame, price was trying to rise to this fair value gap and also the 50% Fibonacci retracement. So that was the reason why on day time frame we had this temporary higher high and higher low. So this is a temporary uptrend which might end up even going a little bit higher to clear those buy stops on the monthly time frame. But however, I expect price to trade lower. But now since we're having a higher low right here, it's headed higher as you can see, breaking this high. But now what happened next is price once again headed higher, breaking this high, then headed lower, clearing these sell stops. Now what this thing means is simply that we're likely to have a kind of reversal. It can be temporary, that is we are likely to start having a kind of sell setup because of this low has been cleared. Because one of the principles, if you really understand a trendy market, is that while having an uptrend, the lows are not expected to be violated. As you can see, it's not expected to be violated. But on this point right here, it was what? It was violated. Because now okay, let me quickly drop this tip for you guys. Now what actually make a particular point a higher low? Because of the fact that level was able to push price higher than the previous high. Because for example, now look at this level right here. Now this low right here is naturally a higher low. Do you know why? Because it's pushed price up, yeah, but it did not take over this high. So it means it is not a valid higher low. Now it went a little bit lower than this low. What now happened? Price went up, breaking this high. This become a higher low. Then now price come all the way down to this point right here. It becomes a higher low because of the fact that it's pushed price up higher than this high. Now do you understand that? Now understanding that concept, all higher lows are not meant to be violated because of the fact that for a trend market to be valid, those lows must be protected. Now, for the fact that this low right here that pushed price higher, breaking this high, was violated, as this price break the low of it, automatically makes what we are having here a reversal market. This is a reversal. Now, the reason why price might be reversing could be for two reasons, but based on my bias, I feel price wants to reverse to this level right here, then head higher to those level look up. But the second reason, which might also be an alternative, is that is, if price keep heading lower, it simply means that price has gotten to the 50% and the price don't want to head a little bit higher anymore. Instead, it wants to continue the downtrend, right? So that could also mean that. But what we have to just do is we have to observe what price is going to do when price gets here. Now let me now switch to my time frame for entry, which is the 1 hour time frame. Now this is the 1 hour time frame, and if you observe, we had this break of structure right here. The price head lower, it went up here. Now this high right here traded lower. Automatically this become a lower high. But if you look at what happened, price broke structure. Now you might be saying that does that mean that I want to start having an uptrend? What I feel right now, this is just a temporary uptrend. And the reason because of the fact that if you come to the daily time frame, what can you see on the daily time frame? Let me zoom a little bit. What can you see on the daily time frame? Look carefully. We have favor low gap. So there's a possibility that price was also trying to go high to just clear out favor low gap and what head lower. So my bias for this week is I expect price to head lower. I don't expect price to head to this high right here, or even if you want to head above this high, it's probably to just clear this liquidity right here. But this overall high, I don't expect price to go higher than this candle right here. For my own bias, I expect price to trade lower. But what would be a confirmation that I should sell GBPUSD? Let me zoom chat a little bit. What would be a confirmation is, if you look at what happened here, this is a higher low, because this low right here push price higher than this candle. So what would be a valid confirmation that we're about to have this price heading lower is when this low is violated. Or let's say on Monday, which is tomorrow, price head higher, clearing this high right here. So automatically this will be what? The new higher low. So it means I will switch my focus from this low to this low. So once this low is violated, I will switch to my selling bias. Then I'll keep selling GBPUSD until eventually price gets to this level right here, right on this red line. The moment prices are at this red line, I will move to the sidelines and observe, see if I can see a reversal to the upside. Now that being said, that is all for GBPUSD analysis. If you do enjoy, hit that like button, share to your friends, hit that subscribe button, and I'll see you in the next video. Peace.